Welcome to Barita Beat. This is our third quarter review of Barita's financial performance for the period ending June 30, 2023. I am Deanne Wallace, Vice President here at Marketing at Barita, and it is my distinct honor and a privilege to be with you today to guide the proceedings. We want to share with you our financial performance highlights and provide insights into our strategy and accomplishments during this period. In addition, we will look at market trends and strategic endeavors that define Barita's commitment to growth and prosperity. Our leadership team, internal financial experts, and researchers have meticulously prepared a comprehensive overview that not only illuminates our performance, but also sheds light on the strategies that drive our mission to democratize wealth for our clients and you, our shareholders. As we engage in discussions today, I encourage you to actively participate as the knowledge shared this afternoon will not only deepen your and my understanding of our company's financial prowess, but will also underscore our dedication to transparency and effective communication. Just a point of note here, this session is being recorded and will be available through barita.com/beat, where you went to register in the next few days. Let me give you an idea of our flow this afternoon. Our discussions will begin with Mr. Stephen Philibert, who is our Group Chief Financial Officer. Stephen will break down our most recent financial results, followed by our Deputy CEO and Managing Director of Barita Unit Trusts Management Company Limited, Mr. Ramon Small Ferguson, who will offer us a review of the overall market as we stay ahead of the curve. Mr. Dane Broadbaugh, our Interim CEO, will round things off, and he will take us through the elements of our strategy and business operations. Over to you, Stephen.
Thank you very much, Diane. So I'll jump right into it with the operating income. Overall, net operating revenue saw a modest increase over the first three quarters of 2%, coming in at $7.4 billion. But there were increases as well as decreases in the underlying components. For net interest income, we saw a decline of $965 million, or 70%, to $423 million. And this has been driven by the impact of interest rate increases by central banks to contain inflation. Those have increased interest costs and reduced net interest margins. We expect the constrained margins to continue for the next few quarters, gradually returning to more normal levels. Fees and commissions increased by 8%, from $2.5 billion to $2.7 billion, driven primarily by our asset management and investment banking lines. Growing these business lines continues to be a major focus for the business. Foreign exchange trading and translation gains decreased 28% to $431 million for the first three quarters. This line item being subject to shifting marketing conditions, which were not as favorable this year as they were in the former year. Investment gains increased 40% to $3.7 billion from $2.6 in 2022 and provide strong evidence of the strategic value of Barita's focus on alternative investments, with this line being driven overwhelmingly by indirect exposure to real estate assets. Looking at operating expenses, the total increased to $3.3 billion from $2.7 billion in the prior year, with the following underlying components. Staff costs grew by 12% to $1.3 billion relative to $1.2 or just under $1.2 in 2022, chiefly reflecting inflationary increases and small changes in average headcount. Administration costs increased to $2.1 billion from $1.4, driven by professional or consulting fees and management fees, as well as increased asset tax driven by the continuation of the growth in our asset base. The major driver of the higher professional and consulting fees is the upgrading of our IT systems as a necessary enabler of our strategic goals. These costs are project-oriented in nature, which is to say that they're not ongoing, and we expect that as these projects come to their full implementation point, we expect to see those expenses fall from the business. So the net profit impact of those is coming out at $3.1 billion for the 9-month period relative to $3.8 billion in the prior year, a 20% decline, or on an earnings per share basis at $2.58 relative to $3.18, a 19% decline. And looking at other elements of the balance sheet, financial position, I made reference to the total asset growth previously, up to 124 billion, 124.1 relative to 109.7 as at the last year end. That's a 13% increase. The total assets is driven predominantly by our securities portfolio, which is a combination of our pledged assets and marketable securities. And that topped $100 billion for the period, 100.3, relative to just under 86 billion as at September. So that represents 81% of total assets as at the end of June. It's funded by total liabilities increasing by 11.1 billion over the 9 months to 88.6, just chiefly driven by an additional 10.6 billion in repo funding, as well as 7.1 billion additional in other debt, and that's partly offset by a $4.6 billion decline in secured investment notes. Additionally, shareholders' equity increased by 3.3 billion, and that's chiefly driven by increases in retained earnings. And finally, our capital adequacy, which we're pleased to report, stands at over 30%, 30.9 to be exact, relative to an industry average of 22.7, or the FSC's minimum requirement of 10%. And that gives strong evidence of our financial strength. With that, I will hand over to Ramon.
Thank you very much, Stephen. So my task today is to essentially contextualize our performance by giving some insight into our view of the financial markets. Right? So I'm going to talk about 4 components here, and we've kind of put some temperature gauges on the screen. Right? And what we're seeing is essentially the successful effect of the central bank's monetary policy in cooling inflation. Inflation would have come in locally at 6.6% point to point up to July of this year, which is a stark decline from the 11.8% peak in April of 2022. Notably, inflation hit a cyclical low of 5.8% in April of 2023, and the BOJ's Monetary Policy Committee continues to watch for the risk of potential reflation. And the fact is that the monetary policy environment, which is characterized by higher interest rates, which Stephen described as having an impact on several areas of our business, and lower market liquidity, has driven prices on an aggregate basis lower. And the expectation is that the BOJ will continue to seek to contain local inflation within the target range. Globally, inflation, however, still remains above the typical target levels, particularly in advanced economies. Now, inflation has been coming down, but that typical 2% level, which is the target of most advanced economies, is still being exceeded all in all. Core inflation is, however, set to continue to decline, albeit more slowly by all expectations. On the front of economic growth, Jamaica has also been a standout relative to its global counterparts, as local growth expectations remain favorable as the country continues to recover year over year. Strong and improving fiscal balances and resilient consumer demand in the economy of our major trading counterparts is anticipated to redound to our benefit and be supportive of local growth. Globally, however, the IMF actually forecasts a global slowdown, particularly in advanced economies, as they continue to feel the strain, so to speak, of economic fatigue. Right? The global economy has been impacted by several stress events, not least of which is the COVID-19 pandemic and its continuing effects. Right? The odds of a recession in the United States are actually more on the balance of a recession actually occurring than the alternative, and is actually now showing odds of around 60%, right? I mean, given the inextricable link between the US economy and those of most of the other economies in the world, you can appreciate that this is a negative for global growth. So our overall takeaway is that notwithstanding the positive trajectory of the local economy with declining inflation, positive growth expectations, and an improvement, I'd say, of business and consumer confidence, it still remains a challenging business environment overall. And particularly with the uncertainty respecting the global environment, the outlook does have some headwinds, albeit with some bright spots. So what are those bright spots, and what are the vectors of our performance? How have things been impacted, right? The first is that we anticipate that there's going to be a continuation of a more restrictive monetary policy, right, to combat any stubbornness that we may experience in containing inflation within target levels, right? That in and of itself will mean that the normalization of interest rates and the interest rate curve may be gradual vis-a-vis being accelerated, right? Now, just to turn to our performance, our acceleration to alternative investments, we think protects returns in an environment such as this, given their lower correlation with traditional asset classes, which have suffered with high interest rates and tighter liquidity. I mean, the equity market is in decline. The JSE's overall market index has retouched the lows that we would have seen during the height of the pandemic. And with higher interest rates at play, fixed income securities have also experienced challenged returns, right? But as I mentioned, the allocation to alternative investments acts as a ballast, so to speak, to our overall portfolio exposures during a time like this. So some of our key business lines are likely to remain somewhat challenged, but the outlook in relation to others is positive. So the business lines that have been challenged and may be challenged as we look out to the next couple of quarters relate to securities trading, given our exposure to traditional asset classes there. Our investment banking business line, however, is showing several bright spots. There has been tremendous growth in our pipeline as businesses have adjusted their expectations and adjusted to the new market environment and are ready to go again to the capital markets, right? So in line with our expectations, we expect that our alternative investment portfolio will continue to provide support to core revenue growth. And given our expectations that economic policy will remain fairly consistent over the next several quarters, we are anticipating a recovery, but albeit fairly modest returns from traditional asset classes that will help to continue to support the performance of our alternative investment exposures. With that, I'll hand over to Dean, who is going to get into the core of our business.
So I'm going to talk a little bit about our business operations and strategy, and in particular, pretty much how we're looking to build resilience as we navigate what obviously is a somewhat challenging environment. Right. So revenue diversification is an important part of our strategy, as we have signaled throughout our various releases. So rising rates would have materially affected our net interest income. But as you can see, notwithstanding that, net interest income has comprised progressively less of our total revenue, as notwithstanding the growth in our balance sheet, we've grown other elements of our revenue. So while we navigate, we'll continue to build resilience through our newly launched portfolio management services. Now, this will offer bespoke and customized investment solutions to our customers, and it complements our suite of unit trust products and our brokerage services, which together provide the building blocks to craft investment portfolios that best suit the goals, risk tolerance, and circumstances of our various clients. As Raman mentioned, investment banking has been a successful business line for us. And even though somewhat more challenging in the current environment, we continue to build the institutional capacity for the business to achieve its full potential, as it provides solutions to real sector businesses that ultimately redound to the benefit of building our nation. One example is our partnership with One Great Studios, as we carry them through the process of their now imminent listing on the June. Finally, as we've emphasized, we continue to progress through the phase of our alternative investment trust. This will continue to be a feature of our business and our revenues. We've been deliberate in these investments. We've been deliberate in building a capital base to support it. And we brought on Mr. Damian Brown, Group's Chief Investment Strategist and CEO of Alternative Investments, further signaling our strong commitment and intent for this business line. Now, much of the revenue from real estate thus far has been based on revaluation gains, but we'll transition more towards development revenue as we engage the highest and best and most impactful use of the property portfolio we manage over the next several years. Meanwhile, we'll continue to cultivate exposure along the other lanes of private credit, private equity, and infrastructure. Now, similarly, we're building resilience by fortifying some key foundational platforms of the business. We continue to enhance our Barita Online channel to make ourselves more accessible to our clients at their convenience. Through this channel, clients can initiate transactions and submit queries or concerns that will be tracked to resolution. They also have the convenience of updating any necessary information to ensure we know them well and are able to best serve their needs while we fulfill our regulatory obligations. Our Barita goal-setting product and service tool, or Barita GPS, is our revamped roadmap that, through an interactive interface, gets to understand our clients' goals, their risk tolerance, and general experience and approach to investing. And with this information, crafts a portfolio and an ongoing investment program or roadmap that enables our clients to reach their goals in the context of their circumstances. We continue to make significant headway in our core system upgrade and our technology upgrade. This is expected to boost our efficiency in years to come and allow us to serve our clients more seamlessly. Now, as technology advancements and enhancements evolve and become more of a requirement and less of a feature, it also helps us to avoid the future costs of not having made that investment. Finally, as we navigate this environment, we'll continue to ensure that we're good stewards of our resources. To that end, we're still focused on managing our expenses. We're ensuring that we control our structural and recurring costs while we work to optimize the scope, scale, and resource allocation to our various business lines. That way, we ensure that each dollar of expenses, wherever it's spent, is most optimally used while eliminating unnecessary costs. Of course, a key element that's going to define our efficiency going forward is our reorganization to become part of a financial group. This we expect to further allow the use of operational and managerial capacity that we've built in Barita to support the imminent growth of our sister company, Cornerstone Trust and Merchant Bank. So this reorganization is going to help us to streamline our operations throughout the group, but also importantly, broaden the scope of our offerings across our collective customer base and optimize the way that we deliver those services, offer an unmatched customer experience. Now, another crucial element of the resilience that we've built is our investment in our risk, governance, and internal controls. And we make these changes incrementally, but when we look at how far we've come, it's a true testament to Barita's and in fact Cornerstone's commitment to ensuring the robustness, safety, and resilience of our company. We've really made deep investments in this architecture. So apart from the overall of our policies and procedures, we would have built out a risk framework underpinned by our enterprise risk management framework. And in doing this, we would have curated a team of globally experienced professionals to bring their knowledge, skills, and experiences to bear in crafting a fit-for-purpose framework. Meanwhile, we continue to strengthen our compliance function and framework, and also strengthen our third line of defense as the group onboarded a chief audit executive with deep experience in audit and risk management, complement our internal audit capabilities through Ernst & Young. We also added further enforcements to our first line of defense through the onboarding of our senior manager for internal controls. add continuous governance and quality control capabilities to our first line of defense. Now, this architecture is further supported by the deep risk management experience resident in a lot of the senior executive of Barita and Cornerstone. And of course, these all come in addition to the continued fortification of our operational processes and enhanced IT controls and security posture that help to ensure the safety of our clients' funds and our stakeholders' resources. So importantly, this helps us to build a solid foundation for growth to ensure that as we grow, we do so sustainably. Of course, industry-leading element of our resilience continues to be our strength of capital. We ended the quarter with a capital base of 35.5 billion, the largest capital base in the securities dealer industry, and 27% of the total capital base of that industry. Our capital ratio was 30.9%, more than 3 times the minimum regulatory requirement of 10%. Now, again, what that does is give us tremendous capacity to grow, whether organically as we grow the various elements of our business, or inorganically as we position ourselves to take advantage of any lucrative opportunities that may arise. Secondly, it provides a stable funding base for alternative investment strategy. Now, a key liquidity management principle is ensuring the stability of our funding matches the liquidity of our assets. Put another way, we need more stable funding to support less liquid exposures. Given the known liquidity profile of alternative investments, we ensured that our capital base was robust enough to support it. Importantly, and in fact crucially in this environment, our capital base allows us to withstand any plausible shocks in the interim. Combination of this strong shock-absorbing capacity and the copious investments we've made in our risk and control architecture gives us the unequivocal confidence that our clients and our stakeholders' resources are safe. So again, we're saying here our strong resilience to shocks, as well as our stable funding base, gives us strong support for our alternative investment strategy. Similarly, our risk capacity, resident in our strong capital base and our broad capacity for leverage, given our well below average leverage levels, also gives our business strong potential for growth. Now, before I close, I want to address some of the recent media reports that we've been seeing. So no doubt, many of you would have seen the spate of media reports, particularly in the Gleaner, speaking to various allegations made against our parent group, Cornerstone, and its senior executives. So at first, I wanted to direct your attention to the recently released statement from Cornerstone, which details important elements that would not have been as clear in those reports. In the meantime, I just want to emphasize a couple of things. Firstly, it was Cornerstone who proactively submitted a claim in the Supreme Court to put these allegations to rest. In fact, it was an escalation to the island's highest accessible authority after having in December written copying the Financial Services Commission, the Bank of Jamaica, the Financial Investigation Division, and the Director of Public Prosecutions, inviting them to review the transaction. Again, Cornerstone has nothing to hide and has invited all applicable authorities to fully diligence all aspects of the transaction. So Cornerstone remains certain of its position. We've generally thrived on turning challenges into opportunities. And this situation gives us the opportunity to have deeper engagement with our customers. We've thrived under many difficult circumstances and in fact have leaned into them. For example, we did 2 of our capital raises during the pandemic. We've thrived under those circumstances and will continue to thrive under this one. Our team remains upbeat and committed to building something special here at Barita and throughout Cornerstone. That's what gets them to work every day to give all of what building a resilient, game-changing company demands. So while we address concerns, we continue to grow our business and our client base, and we continue to land significant deals. In fact, as I mentioned before, as we speak, we have an IPO out in market. Notwithstanding that though, confidence and comfort of you, our shareholders, our investors, our customers, both current and prospective, is important to us. So we invite you to ask any questions you may have, whether here or to our team as you interact with them. What I will say though is that the matter is before the court, so there may be some limitations on what we can say. Again, we invite you to view our press release on the matter for further details, but we stand ready to give the clarification you need as best we can as we put you at ease and make your money work for you.
Thank you, gentlemen, for those insightful presentations and discussions. You know, as a shareholder and stakeholder, as I sat here and listened to them, you know, I remained very confident and buoyed that notwithstanding the challenging environment, our team stands ready to go above and beyond to ensure that our stakeholders and shareholders, that their interests are being taken care of. We're now going to move into the Q&A section. We want to hear from you. Just a reminder, please go ahead and place your questions in the Q&A section you see on your screen. However, in the interim, we will start with a few pre-submitted questions. We had a number of queries from prospective clients interested in opening accounts with Barita. Our client care representatives are in the process of reaching out. However, in the interim, we encourage you to go to barita.com/GPS to start the process with us. One of the first questions that we're going to look at, I'm going to ask Mr. Broadbent to answer. The question is Barita thinking about creating index funds or ETFs for the local market that are tradable on the JTrader Pro website as do local stocks? Dane?
So that's interesting. So we constantly evaluate the best options to add to our product suite in the context of our operating environment, of course, and with the ultimate goal of having as complete a suite as possible, so we can ensure that we cover the breadth of our customers' investment needs and goals. Of course, while ensuring the suitability of our products for their circumstances and risk tolerance. So your suggestion is an interesting one, and we'll definitely take into consideration as we build out our offerings.
Thank you for that, Dane. Another question for you. I think I'm going to throw this one to you, Mr. Broadbent, again, possibly because you're sitting, you know, to my direct right? You know, it's easy for me to just say Dane Broadbent. Is Barita looking in the direction of acquiring a local commercial bank to better facilitate transactions where ACH and RTGS transfers can be made quickly to clients' accounts, thus giving them a chance to get great deals?
So, you know, we acknowledge the convenience that ACH and RTGS transfers can bring for our clients. Within the Cornerstone Group, currently have a merchant bank, so they are part of the financial group post-reorganization. Post-reorganization that I spoke about earlier. Now, this relationship, you know, wouldn't have been publicized as much, but rest assured, we've been working assiduously in the background for the eventual launch of its digital banking capabilities in the market. Now, an intent of this progression includes those capabilities that you spoke of. Now, having said that, the merchant bank is far advanced, you know, in the stages of its development, and we look forward to extending those services to our clients in short order.
Thank you for that. I'm going to give you another. We had quite a number of questions that we got before the start of this session, and so we want to try and answer as many as possible during this session. Another question for you, Mr. Broadbent. I'm interested in opening a medium-term portfolio with your company. I want to start investing, however, I am not sure how to go about doing it. I would appreciate the help and advice.
Well, that's a great question. You know, so I want to say first that, you know, your decision to invest is a significant step towards financial growth. You know, and we're here to guide you every step of the way. So we see the email address that you'd use to ask the question, and we'll surely have one of our investment advisors reach out to you directly to discuss your specific needs and preferences. And in fact, I mean, there may be others who may not have directly asked questions, and, you know, we invite you to submit any questions or interest that you have, you know, through the portal on our website. But what I do want to do is encourage you to explore our user-friendly GPS roadmap, which I spoke of earlier on our website. You can check that out at barita.com/GPS. Now, by answering a series of straightforward questions, we'll gain insights into your financial goals, your risk tolerance, and your individual circumstances. And this information will enable us to tailor an investment mix that aligns with your unique profile and gets you closer to your goals. So we look forward to connecting with you soon and assisting you navigating the world of investments.
Okay, thank you for that response. Another question that we have that I'm going to ask Sir Small Ferguson to answer. Equity funds are generally of very high interest to retail investors. Year to date, the market has been down with the main index on the JSE losing 10%. What explains the Barita Capital Growth Fund year-to-date performance relative to a better performance by its peers? Is there an explanation? I'm so sorry for the sharp decline in the Cap Growth Fund relative to competitors. And what is your outlook on equities and the Cap Growth Fund in particular?
Thanks, Dion. I thought Dion was the one that was in the line of fire, right?
He's next.
So, as you have rightfully pointed out, it's generally been a challenging market for equities for the year-to-date period, both locally and internationally, right? I mean, as I had mentioned when I was talking about just giving the general market context, we are in an economic state, or we're at a place in the cycle where we're experiencing higher interest rates, we're experiencing lower market liquidity, we're experiencing declines generally in companies' earnings in multiple different sectors. I mean, Barita, for example, in our third quarter would not have been spared with respect to that. And consequently, what we're seeing is that bearing itself out in the share prices that you see across the market, right? So explaining our specific performance relative to the market and relative to our peers, Barita's local equity fund would have been one of the better performing equity funds over the course of the last 5 and 10 years. Right? We were, I believe, the best performing fund in Jamaica in 2018. We were, again, one of the best performing funds in 2019. In 2020, when the market took a dip resulting from the effects of the pandemic, we were still the best performing equity fund, albeit we were in negative. And in 2021 and 2022, we had pole positions again. So what I'd say is year to date, some of the better performing stocks in our portfolio over that longer term horizon have been disproportionately affected. The fact is, when markets go down, people tend to sell their winners rather than hold on to the losers a little bit longer. So some of our larger positions have been hit by some selling pressure. We still believe in the fundamentals of most of them, so we've been watching cautiously. So just in terms of outlook, and naturally, just thinking of anything forward-looking, you take it with a grain of salt. We generally believe that the equity market will recover with the state of the economy. As I mentioned, we are seeing signs of both business and consumer confidence returning, and that is usually, or both of those things rather, are usually a catalyst for investor confidence. Right? As Dane mentioned, we are in the market now with the first IPO for this calendar year, which I think is a positive. And it's our expectation that, as market conditions become a bit more certain, as uncertainty is not a friend of positive market performance, right? As things become a bit more certain, we expect that to translate to more positive returns on the equity front in the market in general, but certainly for our equity products as well.
Thank you for that, Ramon. I'm going to throw another question to Mr. Broadbell. I missed the connection with FHC. Is FHC now a part of Barita? This is one of our online questions, so we're trying to share a little of the love. Dane?
All right, thanks. Thanks for that question. So to be clear, what will happen is that Barita will eventually become a part of a financial group. Now, that hasn't yet been executed. As I had mentioned some time ago, in March, we'd have gotten the no objection to effect our reorganization. So we're taking the necessary steps to implement that. We're somewhat advanced, of course, prior to the actual execution of the reorganization. That will then involve the necessary consultations with our various stakeholders, including shareholders and any creditors. But so the process is ongoing. It's not yet executed. But again, we expect to to get significant efficiencies once that is, and significant efficiencies, and also streamline and expand the breadth of offerings to our customers once that is executed.
Thank you very much for that, Dane. There's another question here. I have a monthly salary deduction. Is it possible to get a report monthly, quarterly, as to how the monies are turned over?
So, I'm really glad to see that you're making a continuous commitment to adding to your investment portfolio. We definitely believe that investing regularly is a great sustainable way to reach your goals. And, we continue to emphasize that. So by registering on Barita Online, actually, you can use that platform to view your investment portfolio at any time, as well as initiate transactions, submit queries or concerns, or update your KYC information. Of course, that will supplement the typical statements.
Thank you very much for that, Dane. Ramon, I have a question for you here. How do I invest in property? How does unit trusts work?
Sure, thanks for that question, Dan. So I think I'll take the last part of that question first, right? So what a unit trust is, it is a regulated collective investment scheme. And what that means, just to break it down, is that one, there is governance and oversight with respect to this particular investment product as provided by the Financial Services Commission, hence the regulated piece. And the collective investment scheme describes the fact that it pools together the funds that are invested by multiple different individuals, right? Pulls it together into one big pile that essentially allows those individuals to benefit from a larger investing capability, right? So it gives you more firepower, right? And this is particularly effective when it comes to asset classes like real estate, right? As we all know, to purchase one piece of property, it tends to be a high value investment, right? By any measure. So pooling together your investment via a collective investment scheme or a unit trust to invest in real estate is usually a fairly efficient way for a retail investor, an individual, to get a diversified exposure to that asset class, to that real estate asset class, right? Now, that being said, Barita actually has a real estate focused unit trust fund, right? It's called the Barita Real Estate Portfolio, or REP. And that fund has actually performed pretty well, in particular, over the last 2 calendar years or so, right? The core of our performance has really been the fund's exposure to the MJR Real Estate Holdings Limited, Barita's real estate investment vehicle. And that vehicle has gone through a cycle over the last 2 years of acquiring properties with the intentions of repurposing or developing those properties, right? And the acquisitions would have largely taken place during the height of the pandemic, and consequently, there are some bargain purchases that would have taken place in that period. And that has really been at the center of the explosive, if you want to call it that, performance of MJR and by extension, the real estate fund. Now, it's our expectations that the real estate fund will continue to benefit as MJR moves into its next phase, which is the development phase. But we don't anticipate that the return profile will be as explosive, right? So that's an important point to note. Notwithstanding, that is a medium via which you can get some indirect exposure to a diversified portfolio of real estate. So I'd encourage you to come in, sit with an advisor. It's important for them to determine whether this particular product would be suitable for you, given your specific circumstances. And if it is, then happy investing.
Thanks for that, Ramon. We have another question here online that we're going to throw to this question before going back to another pre-submitted question. This question says, is the current court case with Cornerstone, Sagicor, and Lewin's relative delaying the process to get a financial holding license? Dane?
Thanks for that question. So first of all, no, the court case doesn't present any definitely doesn't present any structural impediments to getting the financial holding company license. We continue to plow along. So just a couple of things that I want to make clear again. So again, Cornerstone was proactive in submitting the court claim. We took proactive steps by filing a claim in the Supreme Court to put to rest the allegations. And the filing of that claim really would have demonstrated Cornerstone's transparency and intent to really lay bare the falsehood that would have been grounded in those allegations. So Cornerstone is asking the Supreme Court to rule on several matters, including the legality of the transaction that would have been entered into between Cornerstone and Mrs. Humphreys Lewin, which is the subject of these allegations. Now, Cornerstone wouldn't have had any indication of the diagnosis of Ms. Humphreys Lewin. Right? We never received any indication written or otherwise, and of course really had no reason to believe that Mrs. Lewin was incapable of entering into the transaction. Now, this has been clearly documented in our sworn statements that have been filed in the Supreme Court. I want to also make clear that our attorneys would have written a letter in December where we would have roundly rejected a request by the niece for monies totaling $20 million in relation to the transaction, which was actually valued at $15 million. We would have shared a copy of that with the Financial Investigations Division, Financial Services Commission, Bank of Jamaica, and the Office of the Director of Public Prosecution. Now, by taking that step, we would have unmistakably signaled our desire for regulatory authorities to examine allegations thoroughly, and that we have nothing to hide. In fact, we actually anticipate and welcome any reviews by the regulators into the matter, having brought it to their attention, so the matter can be definitively put to rest. Now, another thing I want to make clear is that all transactions within Barita and the Cornerstone Group are carried out with the highest levels of transparency and governed by rigorous standards. So approvals for the transactions, especially transactions of this nature, would have been obtained through due process involving the board of directors and shareholders. So the transaction would have been approved by the board and shareholders at an extraordinary general meeting, right? And that's somewhat contrary to what would have been implied by the recent press coverage. So it's not one or two individuals. We want to emphasize that these decisions, are not made by a limited few. Our commitment is to good governance, and that remains firm, and that drives our dedication to accountability and integrity.
Thank you, Dane, for that clarity. Well said. Let me ask you another question, a little lighter, or let me give you a break and throw this one to Stephen. Net interest income is down. Consistent with other companies in the industry, Barita's interest income has grown substantially year over year, but interest expense has grown at a greater pace. What steps are being taken to better align the increase in the cost of funding with the income from earning assets while maintaining prudent risk management?
Thank you for that question. Net interest income has been on the decline due to the faster repricing of our assets versus our liabilities. Of our liabilities versus our assets, pardon me. The phenomenon has been widespread throughout the space. This phenomenon, we anticipate that as interest rates stabilize and assets in our portfolio mature and are reinvested at higher levels, we expect the trend in net interest income to reverse. Barita has been focusing broadly on building out the share of fee income as a proportion of its net operating revenue, and therefore reducing the reliance on net interest income. So for context, net interest income relative to net operating revenue was 6% for our 9 months in 2023, as compared to in the 9 months of fiscal year 2018, it was 19% and 32% respectively for financial year 2021 and financial year 2018.
Thank you for that, Stephen. I'm going to ask Ramon a question. What explains the sharp decline in FX trading and translation year over year in both financial year 2022 and the year-to-date 2023?
Thanks, Dion. So, I mean, a feature of, I suppose, what I describe as the effects of or modernized monetary policy framework, inflation targeting, etc., has been two-way movements in the Jamaican dollar with respect to its relative strength to its counterparts, particularly the US dollar, right? And a consequence of that are varying outcomes with respect to the FX translation and trading. So with respect to straight up trading, the lion's share of which relates to our Cambio business, that business is up year over year, both with respect to volumes traded and revenues. But the decline year over year is actually attributable to a positive but lower outcome with respect to translation, right? So translation really relates to how movements in the relative strength of the dollar impacts the revenue that we generate from our balance sheet position, right? In the case of Barita, we manage that position in a dynamic way to take advantage of fluctuations in the currency. So in situations where, for example, the currency has become particularly strong, and we anticipate that there may be a reversal and there may be some weakening, we may adjust our position to take advantage of that, and the reverse is true. And essentially, the decline year over year has been the result of less favorable market movements in the year-to-date period, at least favorable from our perspective, based on our positions in the year-to-date period relative to last year. So just in terms of our outlook, we anticipate that the revenue from Cambio trading will continue along the same trend, which is a positive one. And we have been exploring additional strategies with respect to managing our overall FX exposure to add even greater predictability to the outcomes from translation.
Thanks for that response, Ramon. I'm going to ask this last question from one of our online participants. What are some of the positive income growing investments that you would recommend at this time? Ramon?
All right, so I'll take that one. And the final one up. So, given the environment, as I mentioned, the investment landscape is characterized by a few features, right? One is high interest rates. So what I'd say is now is probably a pretty good time for investors that are focused on fixed income securities to make gradual investments in that space and lock in higher interest rates, right? So if you're income focused, now is probably the best time that you would have had in the last half a decade, even, or maybe even more, with respect to the nominal rates of interest that you can garner, right? So that's one area of potential growth. We have also seen positive performances in the real estate space. The fact is that the state of the economy and the improvements in both the commercial and residential space have in turn improved the attractiveness of real estate. So we've seen some investment vehicles that have direct exposure to real estate performing pretty well. And that may be an area, again, subject to suitability that an investor would want to look to. Again, given where we are in the cycle, right, and we have seen where the equity market has been in decline, now may be a time, we believe it is, quite frankly, to get constructive with respect to equity securities. Right? Prices are as low as they have been in several years, and there are some bright spots in the market and some companies that are poised for recovery. So now is a good time to sit with the advisor and devise a plan. It may be a plan that identifies some securities to be bought and identify some prices at which you'd want to buy them, which may be lower than current prices. That's fine. But now is a very good time to get constructive, as I said, on equity securities, which have not been doing very well. I mean, that's really where long-term investing starts, right? So that's what I'd say. Fixed income for sure, you can get a little bit, open to real estate, and for sure I'd get constructive on equities and plan from here to execute.
Excellent response, Mr. Small Ferguson. And that certainly has given us our marching orders, all of us to do what we need to do with our portfolios. Let me just say, ladies and gentlemen, this brings us to the end of our session. Any questions that we were not able to get to, rest assured, we will aim to get to you within another couple of days. We will certainly reach out to you. We want to thank you for the ways you participated and engaged with us. Your investment, whether financial or intellectual, is the bedrock upon which our success is built, and we know that together we will continue to forge a path towards excellence and innovation in the financial realm. The conversation does not end here. Look out for this recording, which will be available on barita.com/beat within the next few days, and we encourage you to engage with us further through making money at barita.com. Have a wonderful evening. Stay safe.
So why the OneGrace IPO? So OneGS operates in a high growth industry, which is digital marketing. With OneGS, you can invest in a company that's at the forefront of this exciting industry. OneGS has a proven track record of significant growth and a high potential for future growth. Since the asset acquisition of the high voltage SEO in 2022, OneGS has been catapulted to a record level of growth and is projected to continue on this trajectory. OneGS's revenue sources are diversified across various regions. In financial year 2022, over 50% of OneGS's revenues were derived from countries outside of Jamaica. Investing in OneGrace Studio means investing in a company with a bright future, backed by a proven track record, diversified revenue stream, and an experienced leadership team.
When you invest in OneGS, what are you getting? And I would say you're getting a company that is about growth, about people, and about results. This is an opportunity to build with us here at OneGrace Studio. Our revenue is diverse, right? It's diverse across clients, it's diverse across regions, and it's also diverse across currencies, right? It's hard to find that in a business locally, right? That's the reality. So you get an exposure to different markets, different currency, and the truth is that we're in a high growth industry, especially locally. The reality is that the internet is going to be more important next year than it was this year, right? And our usage is going to be more next year than it is this year as well. And that's one of the things that we're really excited about, is that we get to be a part of this industry that's ever changing and also rapidly growing, because that's a big part of why we believe the future of OneGS is very bright.
We are just really proud of the work that we've been able to do since 2004, and especially since we expanded our focus and our work over the last now going 2 years. And we really want to continue, because the work that we do is process work, yes? So change happens over time and not immediately. We may see incremental differences, and that's very important to celebrate those wins. But we do recognize that, real change takes time. And so we intend to continue on this path to learn from all the different feedback and the reports that we have been given and that we've generated from the work that we've done, and really improve on that and identify new areas that we may want to go into. But we are going to always remain true to the work that we've started and that we continue to do through our 3 pillars: our education and youth development, entrepreneurship, health and well-being. We believe those are 3 very important areas that are critical to us contributing to Jamaica's Vision 2030, and of course to the Sustainable Development Goals. We want to see poverty reduction. We believe that in order to do so, we need to have an educated future leaders who are empowered, not just academically, but who are empowered to be good social beings who are empowered to really be, socially conscious. And that's very important for us because we believe that is how we're going to have that empathy for others. And that is how we're going to have one person climb the ladder, but also send the ladder back down for someone else to come up, so that everyone can benefit from, all the richness that Jamaica has to offer. And we'll continue to shine as people, but also as a whole.
Our partnership with OneJS has been a true success story. We are excited and proud to be the lead arranger and broker for their IPO, and we look forward to accompanying them on their growth journey and our continued partnership.
I think what OneGreat brings to the table is that it's a founder-led digital-first agency. You don't have many agencies out there that offer web, that offer application services, that offer digital and SEO. It's bringing design, it's bringing innovation and strategy all together to serve its clients. You don't have those many options on the stock exchange right now. In fact, you may not even have that option right now. So if it is that you're looking to diversify your investment portfolio, OneGreat is the stock for you to consider.